Uranium investors should keep in mind the East-West divide, says Gwen Preston, also known as a mining maven. Gwen, welcome back to Kitco.
Thanks for having me.
Uranium, it's really the hot commodity right now.
Is it ever? And the East-West divide is a very important part of that. There's really two sides to the uranium. There's two reasons that the uranium market is moving so dramatically right now. One is just straight supply demand. There is significant demand, including right now, not just future demand, but like utilities right now that didn't buy a lot over the last few years. That relates to this East-West thing, partly because some of those are US utilities who just were like, you know, I don't know if this East-West divide is going to play out. I don't know what's going to happen. Let's just see how this works before we buy a bunch of uranium, in case they got it from Russia and that ended up being a bad thing. So there's a bunch of utilities that need to buy uranium now, and the spot market is now pretty dry. Like the spot price that we get is an actual average of transacted terms, right? This isn't speculative. This isn't options. This is actually what people are paying for uranium. And they're paying 100% more than they were 8 months ago because there's just no supply in the spot market. So that's the supply demand side. There's some supply coming online this year, some of the easy pounds, the restarts, but it's small. And it's just got a little bit smaller because Kazakhstan, which produces a huge 40% of the world's uranium, just admitted that, yeah, those big mines that we were going to start up this year aren't going so well. We're having trouble getting sulfuric acid. We're not going to meet guidance. So there's an absolute supply-demand disconnect. The spot market is dry. That's a big thing. Then there's the East-West thing, where America's like, we need nuclear. We need baseload power for our green future, and that has to come from nuclear. We can't put our green future, we can't rely on Russia for that. And so over the last few years, there's been a significant push from US government to become independent on nuclear. That means supporting domestic uranium mining, and recently a big announcement on supporting uranium processing into fuel, because guess what? Russia controls that as well. And that's also really amping the market because not only is there not enough supply, there's even less supply if you limit yourself to non-Russia Kazakhstan supply. So it's a stranglehold and there's no quick answer to it.
The metal that people seem to be the most excited about, the one that they seem to be anticipating the most, is going to be copper. But in your presentation that you gave here at the Metals Investors Forum, you said that that's probably still a couple more months out.
I mean, I think months is I believe it's not this year. So copper is what runs the world, right? And so when copper bull markets happen because the world is going through growth, and when investors are generally thinking, oh my gosh, we're in a growth environment. What do we need to physically build the world? Guess what? You need copper. That argument has only redoubled in a green world because all of the things that you build need way more copper than they used to now that we build in a more electrified way. But we're not at a position right now where investors are positioning specifically for global growth. Like that's not where we're sitting right now. There's still things are doing fine, but investors aren't positioning for global growth. So we don't have that pushing copper yet. We also don't yet have supply demand pushing copper. It's tenuous. Cobre Panama shut down at the end of last year. It erased 2% of the world's supply. That erased any surplus that we thought we were going to have. Like it's getting tight, but we aren't at the point yet where, like in the uranium market, utilities wanted to buy uranium and they're like, we actually can't find it. Oh no, we're not there yet with copper. There is a deficit. It has been a few years out for a few years now, right? It keeps getting a little pushed. COVID, recession, lack of growth pushes it a little bit further. So I think we either one or both of, we need to run out of copper, actually, like have moments where people cannot buy the copper that they need, and or we need investors to start positioning for global growth. We need to get to a point where that's the driving investor push. And when we get to those things, one or ideally both, one or the other or both, then copper is going to, I think, go pretty crazy because the deficit gets really big. We just have not been building the big new mines that we need for 15 years. So the deficit's very big, but I don't think those things are gonna line up the way we need them to in the near term. I'm a big copper bull in the medium term.
You said silver is likely following the same trajectory.
Silver to me is an industrial commodity. So I get that there's a lot of silver investors out there, and that investor flows have been significant in the silver price. stepping back, I think the entire metals arena has been less of a focus for investors in the last decade than maybe it was prior to that. And there's a lot of other things that have cropped up to sort of take some of that space. I mean, all the different speculative things that are out there, crypto and NFTs and meme stocks and marijuana and all of these things, I think they sort of ate up a bunch of the interest. I say that to back up my contention that silver is primarily an industrial metal. So I'm not expecting silver to move dramatically this year, even if gold does, because gold could move this year for its own reasons, which maybe we'll get to. Silver, I think, is going to move when the industrial equation lines up. The industrial equation for silver is just about the same as it is for copper. We need a lot of silver for the green revolution. Like photovoltaic cells need a lot of silver. For the last few years, there's been big deficits. There's always some deficits in the silver market. They've been supplied by de-hoarding. So investors have actually been de-hoarding their silver and recycling. But photovoltaic cells are really hard to recycle. We don't get much silver back out of them. And de-hoarding only lasts so long. So I think silver is going through a bit of a slosh right now. Basically, the available supply is sort of sloshing around and getting smaller. But we still, like copper, we need to get to that point where investors are positioning for growth and they say, oh, silver is a big part of green growth and we don't have enough silver. And or we actually start to not have enough silver available for those photovoltaic cell buildouts. And I don't think we're there yet with either of those. So I think they will happen. Copper and silver could happen at the same time. I just don't see it happening next week.
Gwen, thanks for queuing it up. Let's talk about gold. Gold has been interesting this year. We see the GDX is about, I think it's down double digits over the past year, despite the fact that we hit all-time highs for gold in December. All of the geopolitical issues that are swirling right now as well. You had an interesting writing in your talk. When gold does run, you were saying that it's important to be positioned in particular types of companies that are going to start to run first. What are those types of companies?
Yeah, so I was saying that we still don't know exactly when that gold move is going to happen, because I think that gold has a strong chart. It held its ground really well despite rate cuts that you'd think would have hammered it. Central bank buying is really strong. It's well supported, but I think the next leg up is going to require a catalyst, which is going to be rate cuts. And I don't know exactly when that catalyst is going to happen. I'm not sure it's going to happen in March. It might not happen until May. We'll see. Anyways, it's not next week. And so I didn't want to stand up there and say, we should all buy a whole bunch of gold stocks across the risk spectrum.
You can do that here.
I just don't know that it's going to happen next week. It may happen in 3 months. It may happen in 6 months. I think it's going to happen this year. But most of us play with a capital constrained purse in our investment portfolios. So if you disperse all of your money into gold and then you end up waiting months longer than you think you're going to, that can get stressful. So what I said was when gold goes, when investors become interested in gold stocks, because the gold price breaks up through 2100 and we start to get that excitement that we haven't had for a while because it's been very strongly sideways, then the classic pattern is what it is, which is that the producers, especially the high margin and or high grade producers, and the leading development projects. There's not very many big advanced gold projects that are either under construction or reasonably close to being built. Those are where the money's going to go first. And so I think it's very prudent to put money into those opportunities now as your exposure without putting it all out there. Get your exposure, have it ready, but don't completely expose yourself because it might be a little bit of a wait yet. So get yourself some exposure to the things that move first and best when gold does go. And then when that starts to happen, then you can have your list of exploration companies and resource growth companies ready, and you can deploy capital into those when the timing is more certain.
Lastly, Gwen, what are some of your top ideas?
Oh, goodness. Top ideas. I mean, I really think that there is a huge amount more run in this uranium market. I know that if you're not deployed yet, you probably feel like you've missed it. I don't think you have. I think that the uranium could easily go to $200 a pound. Like, it could double again from here. I also think that uranium stocks have not levered the gains in the uranium spot price to date as much as they might have, because just the hesitation around nuclear is still a hangover. Sentiment has shifted dramatically on that front. I mean, we have all kinds of environmentalists and politicians actively supporting nuclear now, and this has been a big shift over the last 2 years. But there's still hesitation hangovers. Those are clearing. It's working through. I just think that means that the equities still have more leverage to dole out on the gains to date in the spot price, let alone on the gains that are yet to come in the spot price. The best opportunities in uranium for this market, taking advantage of that east-west factor, are growing U.S. production. So the uranium energies, the encore energies, those groups are those stocks are probably the ones that are going to get the best lift in this really exciting uranium market.
Gwen, thank you very much for your time.
Thanks so much for having me.
My name is Michael McRae with Kitco Mining here at the Metals Investor Forum in Vancouver, British Columbia.